This is Chapter 8 homework, and I'm going to help you a little bit with this one because it's not explained well in the book, but you need to know what's going on here. Especially if you buy land, it has a building on it, you're going to put another new building on it, and there's all types of costs involved. You need to be able to separate out the cost of land versus the construction costs or the cost of the building, the new building. So let's kind of saunter through this. The negotiated purchase price, okay, of the land is $181,000. So I'm going to spend for land $181,000. But there's more, of course, there's always more. So here's our initial cost. Plus, we have $76,000 has a building on it, an old building. So I've got to pay for that. So that's part of the cost, $75,000 to get the land, and then the company pays $34,000 to tear it down. Then, and we have to pay $50,000 to prepare it to be for preparation of building. So they've leveled it off. They've bought the land. There was an old building on it. They had to pay for that. They had to tear that down, and then they had to prepare the lot to level it so it was usable. Let's put it that way. So then, your next amount, it also pays a total of construction costs, it says here, of $1,277,236. And what else? So that's the total. Okay, let's get some commas in there so that it makes a little bit of sense. At least we can visually eyeball it. So these are construction costs, and that comprises of a new building for $1,201,400. So that's the new building. They paid for that. And what's that final one for? Oh, so you have lighting and paving on the parking lot. And you paid $75,836. Well, what do you do with all those? Well, first of all, I need to get that where it belongs. So that goes there. So how do I know the cost of the land versus the cost of the building? Well, first of all, the land cost me $181. We know that. To get that land, I had to get that building. So I had to pay $75,000 for the building. So that basically becomes part of the land. Now, to be able to use the land the way I wanted it to be used, I had to tear down the old building. So that cost goes into the purchase of the land. And then I had to level that out so I could use that. So I have to take all of the costs that it took to get the land ready to build on and put that into the cost of the land. So that becomes my cost of the land right there. I would let you figure this out, but the book does not give you a very good description of it. Now we have total costs here for the construction cost of $1,277,236. And that comprises the new building and the lighting and paving. So that separates things out, but we have one more step. We're going to debit land. We're going to debit the building for this amount right here, but the lighting and paving is not part of the building. It's part of land improvements, and land improvements can be depreciated. So you're going to have to separate those two out. So this is the actual building, this is the land improvements, and this is what you paid for land. So those are improvements that can be depreciated because you may have to repave. How long is that paving going to last? And you may have to put in new lighting. How long is the lighting expected to last? You can't depreciate land, but I can the improvements because those will have to probably be redone. So that's it. I just wanted you to look at that scenario of how you dig out or categorize and put things and costs in the right location and how the concept behind it. So now let's move on to straight line. This one should make a fairly good amount of sense. So this is straight line. You know what you're going to do. It has a machine. It cost $91,600. It has a useful life of 10 years. You'll put that here. And what's its residual? Useful life, cost $96,000. Has a salvage value of $13,000. Salvage value and residual are the same thing. So what do we do here? I take the cost minus the salvage or residual, divide that by the useful life, and come up with the depreciation a year. And that's going to be the depreciation for the first year and the second year and for how many years that you are going to depreciate this. Now, what is the book value after the first year? So to get my book value, I'm going to take my accumulated depreciation, which is your first year's cost right here. I'm going to subtract that from the total cost, and that gives me book value. I can do the same thing for the second year, but that's going to involve adding the first year and the second year accumulated depreciation and subtracting that from the cost. So and so forth. Now, the other thing that you need to figure out is percent of depreciation per year. So we have it for 10 years, right? So that looks like 1 year over 10 years equals what percent? So 1/10 equals what percent? So each year I'm depreciating 10% of that depreciation base, which is the cost minus the residual or the salvage. Straight line's fairly straightforward. Now, let's look at double declining, though. Now, that's going to be a little bit different. With double declining, I don't look at the salvage value when I start my calculations. What I look at, first thing, is what is the normal depreciation. So this is 5 years. So that's going to look like 1 over 5. And that is 20%, correct? So now I'm using double declining. So that means I'm going to double this percent. So my depreciation rate becomes 40% here. And now you begin the calculation. You take the cost, 240, multiply it times the 40 to give me the annual depreciation. And that must be, I don't have the numbers in front of me. 240, the annual depreciation for the first year is 96160. So now we have And what is my accumulated depreciation? Well, that's going to be my annual depreciation. It's just going to be the first year there. So what's my book value? And this is where that book value becomes so important. Book value is this 240 minus the accumulated depreciation here. So that would equal 240 minus the 96. Now, this amount right here is what you will begin this year, next year's depreciation at. This is 240,400. There you go. So you multiply this times the 240,400 and come up with 96,160. That becomes your accumulated depreciation. That's your book value. This then comes down to this point. And you start the calculation all over again. You bring down that 40%, multiply it times the 144,240, and you will come up with, I want to show you how to do that accumulated depreciation. You come up with 57,609. Now, your accumulated depreciation now is what was in accumulated depreciation plus what you're adding this time. So now my accumulated depreciation includes both of those depreciation expenses, and my book value becomes the original cost minus the accumulated depreciation, which gives me 86,544. That gets carried down here, and you start the whole process over again. And I'll let you take it from here. But that's double declining. Now, once you hit the salvage value, you have to stop. Okay, you can't go below the salvage value when you're doing the calculation. So do this row and this row, and I believe it stops in year 5. We can't take any more. So do these 2 rows and see what you come up with. And then finally, our very last one we're looking at here is we're going to sell. And that amounts to figuring out the loss and the gain, right? So to begin with, you have, let's kind of ferret this out. We have a milling machine that costs $125,000. It has accumulated depreciation of $93,000. And they want you to prepare an entry to record the disposal of it under each of the following independent situations. So what is this book value? First of all, the very first thing I would do is figure out what is the book value of this. So that's going to amount to what? The cost minus the accumulated depreciation. So it's going to have a book value of $32,000. So this is our book value. So now you have all the numbers you need to continue. So, okay, let's look at this. They sold the machine for $16,000. Well, what's your first entry? It's going to be cash, right? For $16,100. What do we know we're getting rid of? We don't know if it's a loss or gain yet, do we? So I'm going to leave this blank, and I'm going to say loss or gain. So what do we have to get rid of now? Actually, I'm going to bring that down to here. That'll give us room for the accumulated depreciation. We know we have to get rid of the accumulated depreciation, and that's going to be a debit, and that amounts to $93,000. We know we've sold the milling machine, and it's on the books at 125, so I've got to get rid of that. Now, the difference between those two will determine what we do here. And let's just make this easy and do there. So, what is the difference between these two? If I add this together, equals this plus the depreciation, I'm getting cash. Alright, I've got a debit of 109, and I have a credit of 125. What do I have to do to balance that transaction? Well, my debits don't equal my credits, right? So I have to increase my credit. And that is going to be the difference between these two. So I have a debit, which is going to be a loss of $15,900. Does that make sense? That is number 2. I just saw I skipped number 1. So this is talking about we sold it for $16,100. The next one you're going to do is you're going to sell it for $32,000. What will your entry be? These are the accounts you're going to be using, but is that going to be a gain or a loss? Is it going to need a debit or a credit? And then you're going to do it for $41,500. This one, the top one, we're going to talk about in class so that I can explain it a little more. So, just do 2, 3, and 4 on this. And that will give you a pretty good overview of buying and selling and recording a loss and a gain for machinery. Remember, your accounts are cash, whatever the accumulated depreciation is, and how much the cost of the machine. This becomes what we call a plug number. You know, the difference between these two, whatever it is either going to give us a gain or a loss. So that takes care of Chapter 8. There was another sheet on this, but I removed it because it's not explained in the book. I think you have your plate full at this time. So, onward and upward.